Hey, this is Jeanie Shea with Keller Williams Realty, and I wanted to have a conversation with you guys today. I've talked to a number of my clients who, because of this whole COVID-19 thing, are finding themselves in a very difficult spot financially, and it's affecting their ability to make their mortgage payment. So I am certainly not an expert at those things, but I have a great mortgage person who is. And so I wanted to have a conversation with Michael Weber today with Weber Mortgage. He is a local lender. He is my go-to guy. He is the one who is all-knowing about these things. And in my brief conversations with Michael, he has talked about important questions that you need to ask your lender if you find yourself in a situation where you can't make your mortgage payment. So I wanted to introduce Michael Weber today. Thank you so much for joining us today.
Hey, thanks, Jeannie. It's my pleasure, and thanks for the kind words. We are certainly in uncharted territories, and everybody knows that. And so how we deal with all this? Well, our government has taken some steps to try to help people individually deal with financial hardships in COVID. And they've given some guidance, but they haven't, as the government tends to do, given a ton of specificity. So it's really important that each person understand their own opportunities. And that's kind of why we're here.
So what would you suggest someone who finds themselves in that situation and they know they're not going to be able to make their mortgage payment? What do they do?
Well, actually, I would say to take a half step back even before that question. Forget, you're not going to be able to make it. Let's think about, I may not be able to make, or I'm losing sleep worrying about it. It doesn't have to be the bank account balance is so low that it's the 5th of the month today and I can't write that payment. It could be, hey, look, I'm okay this month, but what about next month? Like, It's not too early to start asking yourself these questions and getting some answers to questions that you need to know to make an educated decision. So the first step, and the thing that you need to understand, first of all, is how the CARES Act impacts this. Essentially, the government says, consumer, you can request a 6-month forbearance on your mortgage payments, and the loan servicer, whoever you write your payment to and get a mortgage statement from, they are required to approve that without any documentation. Now, they can ask you some questions to confirm that this is COVID related and you're having a financial hardship, but they cannot ask you to send in a pay stub showing you have fewer hours. They can't say, what does your commissions look like? Prove to us that you're making less money or that you've lost your job. They can only ask questions to identify that you are having a financial hardship, and then they have to grant up to an initial 6-month forbearance. And that term is going to be important. We're going to talk a little more about that in a minute.
Wow.
After 6 months, you can actually request an additional 6 months. So you can go up to a full year right now if you have a COVID-related financial shortfall, up to a full year now without making a mortgage payment.
Wow. So, and when someone makes that phone call and they apply, whatever that is you're doing, and you're granted that forbearance, I understand there are some questions that they need to ask so that they're making the best decision for their family situation.
There definitely are. Let me tell you a couple things about before you pick that phone up. Number one, because of what we're going through, this will not be 5 minutes of your time. Do not make this call from in your car on your way to work or to the grocery store, because we're hearing horror stories about people being on hold for hours. And you can imagine nobody is prepared for this, right? We're not staffed up for 20% of our clients to all call us at the same time. So just be patient. Understand that the loan servicer you're working with, they're probably hiring people every day to handle the volume of calls that are coming in, but don't expect it to be a 10-minute phone call, okay? So don't do it when you know you're on a deadline, because you're just going to waste that 10 minutes of your day.
Extra dose of patience to start out with.
For sure. These, more than ever, I would say lenders, bankers, loan servicers are on the consumer side. This is not, in this scenario, this is not us against them, you against me, our interests against your interests. This is, how do we get through a pandemic of, biblical proportion that no one was prepared for with as little collateral damage as possible. That's everybody's goal. It's very different than a decade ago when the housing market and the housing bubble burst and we had all these foreclosures. Like, this is a totally different scenario. So whatever your experience was then, don't just assume it's going to happen today. These are some of the basic questions. First, you need to ask about forbearance. Theoretically, forbearance is basically the ability to not make your mortgage payment. Okay. And the government has added in the CARES Act that you theoretically cannot be punished for that. What do I mean punished for that? They cannot turn you down. They cannot request documentation. We talked about those. They also can't charge you extra fees for doing it. Now, your interest does not get suspended. You're still accruing interest on your loan just like you would, but you're not required to make that payment for that period of time. How the forbearance is dealt with on the back end, when we come out of this forbearance, this is the biggest uncertainty that the government did not give any guidance to. So this is where the most of the questions need to be. When you call, and especially if you're not at the point where you physically cannot make the payment, your questions need to be geared towards, if I do this, how do I transition out of this at the end of the process?
So what are the different options that you're aware of?
Okay, great question. So we're seeing right now, most servicers are handling this in one of, let's say, 2 or 3 ways. The least consumer-friendly way would be you get your forbearance approved, and you get 3 months, and then you find a job or your income comes back. And when you are at the end of that period, you make your 4th month payment and you make all 3 months that you've missed along with that 4th month.
Wow.
How much is that really helping the consumer, Jeannie? If you don't have the money to make 1 month's payment today, you're not going to have the money to make 4 months payment in 4 months. Now remember, you can request an additional period of time after that initial forbearance. So you can kick the can down the road, but at some point, there's going to be the end of these periods and you're going to have to make some sort of repayment. So that's scenario one. If that's the scenario, just be prepared for it. I don't know what that means because you probably don't have many options if you've already lost your job and you don't have any income.
So as a consumer, do I have a choice in that matter? So is the lender going to say you can choose this choice or whatever other choices, or is it dictated to me?
That is a great question, and that's one of the questions to ask.
Okay.
So let's assume that your loan servicer gives you the answer that I just gave. In month 4, you're going to need to make 4 months payment. Your first question should be, what are my other options?
Okay.
Because every servicer gets to set their own rules for this as of today. Now, we could get more guidance on that in the future that says, oh, here's how you have to handle it, but we certainly haven't yet. So option number 2, and I'm going to go to the other end of the spectrum. Option number 2 is the most consumer friendly, and that is these 3 months, we're basically going to lift them up out of your payment schedule, move them to the end, and put them on the back end of your loan. So instead of your loan being paid off, let's say January of 2030, it's going to be paid off April of 2030. And those 3 months will be made up on the end. You're still accruing interest on those 3 months, but you're not making those payments during the 3 months, and there's no immediate catch-up required. That is, we used to call that deferring the mortgage, really more so than we did forbearance, but they're using the term forbearance generically here. So that they may give you that option. And I think at least one of the largest loan servicers that I've heard of is basically telling people this from the beginning. In my opinion, that is the most fiscally responsible act that a servicer can make. But I want you to understand this. This does not come without a price to them, which is why we see the biggest ones making it. They're still required to make the principal and interest payment to Wall Street as part of that mortgage-backed security. So they're essentially at that point lending you their 3 months, their money for however long that is, and they're not getting their money till the very end of the loan or till the loan is paid off. So
Wow.
core servicers may not have the ability to say, we're going to give you 12 months of payments, that we're going to make your payment essentially for you for the next 12 months, and you just pay us back at the end of it.
So that's the second one. And what is the third one?
Number three falls somewhere in the middle. We're not going to add everything to the end, but we're going to give you a repayment. Once you're out of the forbearance, we're going to restart your normal payment, and we're going to come up together with some sort of a repayment plan over 3 months, 6 months, 9 months, 12 months, whatever it ends up being, where you're going to pay a surplus above your current mortgage payment. How realistic is that? We don't know. Nobody knows, when is our economy going to be opening back up? When are really people going to get back to work? It could be something where they try to start people down that path and then move them to the end of the term if they have to. There's so much uncertainty in what's happening, and because there's no requirement for that end process, we're going to have questions, and every single servicer is different. So that's why it's important. And Jeannie, when she called me, said, "Hey, what do we need to tell people?" It's that you can't assume that anybody else's experience will be your experience. You need to make the call yourself. You need to ask those questions. I literally asked my number one servicer that we sell most of our business to, with this craziness, what is your company policy for how to move forward? And she said, we don't have a policy. We treat each consumer uniquely. Well, you can imagine now why the is lasting so long. And can you imagine a $700 billion bank saying we're going to play it case by case? That's crazy to me. You'd think there would be a defined policy that would go to everybody, but some of these institutions are not yet doing this.
Wow. So to recap, what I hear you saying is, number one, people need to call long before they think they might have an issue. Go ahead and have that conversation with their lender up front and find out what their options are. Do it sooner rather than later, and then you've got three options that you're pretty familiar with that they can inquire about, not to assume that their situation will be like anyone else's. So it is so much a case-by-case situation.
The biggest cautionary thing I would tell you, Jeannie, is there are some people out there who are going to think, if I can't make my payment, it's okay. The government says it's okay. I just don't have to make my payment. You can't just miss a payment. Please don't just miss a payment. If you call your servicer and go to forbearance, your credit report will not show that you immediately missed a payment. We don't know how it's going to look a year from now, but it's not going to say that you're 30 days late on your mortgage. If you just don't call and don't make the payment, it is. And you're not in forbearance at that point, you're potentially in foreclosure. So please don't do nothing. Make sure you call your servicer. One other word of caution that I've heard of, and I'm fascinated by this. I know there are a lot of smart people out there who are thinking, this is a great opportunity for me to use this forbearance as a tool to do something else, right? Like, okay, my house payment's $2,000 and I owe $6,000 on my credit card. If I just go into forbearance for 3 months, I can pay my credit card off in 3 months. We're talking to consumers who are doing this. This is not, I don't even look at this as a bad thing. Financially, it's trying to take advantage of an opportunity you've been given. Here's the problem. You need to understand that while they tell you this isn't going to impact your credit as far as forbearance, what they don't tell you is your ability to mortgage in the future will be affected by whether you did the forbearance. Fannie Mae, Freddie Mac, HUD, VA, USDA, none of them have officially changed their requirements for the waiting periods after a forbearance period. So if you go into forbearance, typically you have to get caught back up and then make your house payment on time for another year before you're eligible to another mortgage. So you won't be able to refinance and get cash out. You won't be able to sell and buy a new house if you need a mortgage for at least a year. So just know forbearance is literally designed to be, hey, I need help not losing my house. It's not designed to be a financial tool to be used to make up ground somewhere else.
Wow. What a treasure of information. That is invaluable, Michael. Thank you so much. I really appreciate your expertise and you taking this time with us. And I hope everyone listens and shares this with people they know who are in this situation, unfortunately. How do people get a hold of you, Michael? People who are looking to buy, who need a mortgage, or they want to refinance.
Sure. They can certainly just look us up on the web. We're at webermortgage.com, and Weber you can see spelled in the background there with one B. Or they can call me directly. They can call the office. The office number is area code 205-823-6701, and they'll either get to me or another loan officer.
Awesome. Thank you again. We so appreciate your expertise.
Thanks, Jeanie.